Hello, my name is Stephen Chung, President of Field Operations at Delphix. I will be your host today to discuss the impact of digital technology in the banking industry. Jamie Dimon, the CEO of JP Chase, has recently stated, and I quote, "Banks are facing extensive competition from Silicon Valley, both in the form of fintechs and big companies such as Amazon, Apple, Facebook, Google, and Walmart. Fintech's ability to merge social media, use data smartly, and integrate with platforms rapidly, often without the disadvantages of being an actual bank, will help these companies gain significant market share." Mr. Dimon's sentiments serve as a good proxy for traditional banks and why they're investing so heavily in technology. To discuss these trends, we're delighted to welcome two industry experts from the banking industry who will share their insights with us. First, we have Lindsay Lawrence, who serves as the Executive Vice President and COO of First Foundation Bank, a publicly traded business headquartered in Irvine, California. Ms. Lawrence is a 15-year veteran of the financial services industry who has been nationally recognized by the American Banker on the Most Powerful Women in Banking Next list. She's responsible for all deposit and treasury operations, including the digital bank, which she spearheaded and developed, and is now offering such innovative products such as Bitcoin and other services for their clients. We're also joined by Jacob Sorenson, who is the Chief Information Officer for Bank of the West, a $100 billion division of BNP Paribas, one of the largest banks in the world. With over 20 years of experience in the financial services industry, Mr. Sorenson leads a 1,400-person technology organization responsible for strategy, application development, and technical operations across the enterprise. All right, Lindsay, my first question is to you. How did you get started in banking?
It's kind of funny, Stephen. I think you could put me in the category of an accidental banker. I never wanted to be a banker when I was a kid, unless I was playing Monopoly. True story. So I actually graduated from Northwestern University. I came home, was trying to figure out what I wanted to be when I grew up, and was interested in the apartment lending world. And I was babysitting for a family whose husband was actually the CEO of a local bank, and asked me, I knew I was good at numbers and gave me a shot. So I started working on the apartment lending side, spreading deals. And what was really funny was at that time, this bank, and it was a smaller bank in Southern California that actually got gobbled up by Washington Mutual back in the early 2000s, like many banks down here. But I was joking around because so many people that wrote good faith deposit checks to do their loan were writing them from banks that weren't from our bank. And so I said, well, gosh, don't they know that we actually have deposits too? And so the CEO said, well, then why don't you go get their deposits? And from there, I just fell in love with the deposit side, and then figured out it wasn't working fast enough. And so I started tinkering with the operational side. And I was the 22-year-old that had big ideas and couldn't figure out, well, they still wanted to use paper all the time. So got tasked with all the tech stuff. And before I knew it, 15 plus years later, I'm still in banking, and I actually just love it.
That's awesome. Thank you for sharing that. That is awesome. The accidental banker. I think you have a new nickname.
It's true. It's true.
So Jacob, similarly, how did you get into the industry?
Yeah, so it's a long story, but I'll try to keep it brief here. So during the let's call it the first .com era here in San Francisco, I was a young developer, and just through a college friend, found out about a company called NextCard, which was one of the first fintechs, right there along PayPal. We were issuing credit cards online. So that got me into, let's call it the financial services world. We were doing great. We went public. And then as the economy turned after 9/11, the FDIC woke up and said, wait a minute, we have an online bank. And so we were actually a chartered bank. We were taking deposits. And, this is 20 years ago. From there, I went to another credit card company called Providian, which was acquired by Washington Mutual. And then I spent some time with JP Chase.
Awesome. Great stories. Great stories. How has the rise of digital technology changed the way consumers want to engage with traditional brick and mortar banks?
I think that's a great question, Stephen, and it's completely changed. Back before, we were so focused on our online banking platforms. They were very PC focused first. And the reality is the majority of our clients, I mean, just for starters, they don't want to talk to us on a PC anymore. I mean, they're on a mobile device, whether it's an iPad, an iPhone, you name it. And so the irony is that we've had to shift our development to be mobile first now rather than PC, which is funny. That's to keep up with all the apps. It's that app technology. It's the user experience that has become so much more critical than it ever was before. And it's funny because that's, I think, some of the conflict that we have in our old traditional way of thinking is that, that wasn't always that initial driver, but now it is paramount. We've had to become device agnostic. It was a big push to get people, they didn't want to go to the branch to make their deposits. So we got them those cool little remote deposit capture machines that they could put on their, next to their computer in their office and scan checks, and that was so great. But the reality is that's fine, but let's be real. They want to take a picture of their iPhone. And so, limits need to be the same, regardless of whether they walk into a branch, take a picture on their iPhone or use an RDC machine. And the reality is that's the way the consumers want to behave. And the fintech world has really driven that change for us. And, we need to adapt and we need to be agile. We need to be nimble.
Great. That's awesome. And again, it's the challenges of you're the incumbent, but yet there's this rise of additional disruption that's happening from, fintech companies that don't have the cost structures of a traditional bank, but they're weaponizing, the platform for the battle for customers, which is the mobile app. And so let's switch over now. Jacob, as the technology executive that has to support folks like Lindsay, what are some of the challenges that you face, particularly coming from the traditional brick and mortar enterprise? It's one thing if you were the CTO or the head of product of a new tech company, born in the cloud and, in Silicon Valley without all of the costs. But yet, I've been in these board meetings where they tell the CIO, we need you to do all this super cool innovation, but oh, by the way, you're still laden with all of these traditional costs and data centers. And, they're really asking you to do two virtually impossible things.
No, that's really a big crux of the problem for us is, being a regional bank. As you point out, we have decades of technical debt. We still have a mainframe that our core banking system sits on, as do many banks, including regionals. But we're competing against the likes of JP Morgan Chase. We're competing against fintechs who were essentially born in the cloud. And we're competing for the same exact customers. Yep. So that's really been the challenge. And I think the way we look at paying down our technical debt is how can we do it in a very strategic way, and that's where our IT strategy comes into play. No new banks today are built to be brick and mortar only, right? Every new bank today that starts today is a digital bank. We've been able to see, just to piggyback off of some of what Lindsay said, post-pandemic, our digital strategy probably accelerated about 5 years just in the last 12 months. The amount of customers who no longer want to come into a branch, the number of customers that now needed to learn how to deposit a check on their phone, who had never done that before, right? So that there's just been an acceleration. We've eliminated all wet signatures across the bank. Even in our back office, where we still had a number of paper processes, we've essentially declared war on paper. And so anywhere that there's paper in a process, we're trying to rip that out and reimagine it. But one thing I will say where I do think we can't forget is there's still value in the human plus digital. I don't think we've completely gotten to a place where 100% digital will completely win. And so, we're even seeing that with millennials, that we've seen an uptick of millennials wanting to come in, wanting to talk to someone, a person, about financial advice. And so I think how we can marry digital and human is really front and center with our strategy.
Jacob, I totally agree. Our philosophy is not either or, it's really both. And I think it was so highlighted during the PPP process during the pandemic, because what we found was we too, same thing. It drove those traditionalist, clients that wanted to come in. They wanted the cookie and the cup of coffee, and they wanted to talk to a human. They were afraid to go into the branches, right? So that forced, I'm with you, 5 years of change in months, which was fantastic. A lot of these fintech companies, a lot of these digital only banks, the Marcuses of the world, all of a sudden, they weren't offering PPP loans, but yet that's where everybody was banking. They were at a lot of these institutions. So when they tried to get that help, they couldn't talk to a human being over there. There wasn't a relationship. And I think that really helped the community banks, the regional banks, the actual brick and mortar banks had a place to play in there. And I think it really highlighted exactly what you said, that the relationships and that human interaction matters, in those moments that matter most. Sometimes you need to pick up the phone and talk to a human being. And I think that's important to remember.
Oh, that's fascinating. It's interesting as I kind of look at this as a technologist, and I see some of the parallels between what's happened with retail and Amazon and sort of digital commerce versus the Walmarts and the Macy's of the world. And if you ask retail CEOs, they would say the same thing, like, you know what, people still want to shop physically. It's great to get your groceries online, but there's still this shopping physical experience of the stores are actually an asset for us. And yes, they're expensive, but there's still an element of the human experience of shopping that we can't do. And I think about, okay, millennial, let's just think about my first loan. There's a lot of trepidation. Oh my gosh, I got to get a mortgage. Like, what does this mean? Or I just got married. I'm opening up my first 401k. Like you want to talk to a human, and there's some comfort level of sitting down with somebody and having a banking relationship. So on that note, I'd love to understand, what's the future of banking? There's sort of this mortal combat between the pure play fintech companies, traditional brick and mortar banks that are kind of building more of an omni-channel digital consumer experience. Like who wins the race ultimately?
Well, I think what we're learning, Stephen, is that, the reality is there's a place for banks. There's a place for that traditional infrastructure. And I don't think the banks go away. And I think what we're starting to see is more of that marriage between fintech and bank. I think that's where the secret sauce is, because we need one another to kind of get to that next spot. And so I think the more strategic partnerships that you're seeing in these industries is really going to help get what we need. I think consolidation and aggregation of the wallet is important, right? I mean, we all have how many different apps that have pieces of our pie together, and being able to see it in a better user experience is kind of part of it's where Mint really came in, right? But having some of those pieces aggregated where you can actually transact on the business, not just see what you're doing, but actually make changes. Those kind of things are going to be important as we go on. I think for our company, that's why we kind of talked about the crypto space, and that's what brought us into the Bitcoin realm. What we're trying to do is bring Bitcoin into banking, because I think it's twofold. One, there's a huge bit of the people out there that are interested in that crypto world, but they're afraid to do it. And they'd have a lot more confidence to do it if they were doing it through their traditional bank, because the bank has that trust that not all these fintechs have yet. So our idea was that, okay, so if we can partner with the company, we're talking to a group called NYDIG right now, to be able to be the front end of that and allow our clients to buy, hold, and sell Bitcoin custodied over with NYDIG, we can allow them that security and that sense of support there to allow them to transact. Where that goes in the future, who knows? Could that be payments one day? Maybe. Could that be lending? Maybe. But for now, let's just give them that access. I also think there's a lot of interesting opportunity on the back end on the, with the potentially the blockchain side of things. And I think we all need to be thinking about parts of this, or else we might not be able to stay relevant down the road, regardless of how that world takes off.
That's great. Jacob, how about yourself on the same topic?
Yeah. A number of thoughts come to mind. I agree with Lindsay's comments. I think when I think of a bank, banks can be complicated. When we think about consumer banking, yes, there is a lot of fintech pressure happening, maybe also on some of the SME space. But when you get into complicated wealth management, certainly when you get into corporate banking, investment banking, These are complicated things that I think will be around and not be disrupted too much. But I do think so on the consumer side. I think that's ripe for disruption. It's already happening, whether it's smaller fintechs picking apart pieces of our income statement, or the platforms who kind of create this ecosystem play or this sort of open banking play, which could turn banks into kind of these phantom balance sheets where they don't really know their customer anymore. They just kind of exist to facilitate the regulatory side of things. So I think there's a lot that we have to do to continue to accelerate, to continue to compete in that digital space. Data as well is a key aspect of that. One area that I do think we need to continue to do better is knowing the customer. We, unlike a fintech, you're getting your mortgage from us, you're getting a car loan, you might be doing some wealth management with us. We see where you're paying your bills. We know about your payments. How are we using that information to understand more about you and to understand where you might want to go? And that's where that banker side, that human side, can also help. If we're giving this information, giving this advice to bankers who can be better informed about their clients, I think will go a long way.
One of the things I think continues to be a challenge is with the proliferation of all these mobile applications and the proliferation of digital, there is this data. And in a regulated industry like banking, there's data privacy, right? And there's CCPA now in California. In Europe, there's GDPR, there's all these regulations. And so, Jacob, maybe starting with you as a technologist, like how are you managing the data privacy and the continuous sort of pressure of regulation, knowing that, again, the demand for innovation around your digital footprint just grows exponentially, right?
Yeah, well, job number one is to be safe and secure. I mean, period, right? If we fail at that, that erodes a bank's number one asset, which is trust. I mean, banks are built on trust, for millennial, right? That's just what it's about. And it's a very complex topic. The bar is continuously raised, whether it's from cyber criminals, our regulators, even our customers, and what they expect from us. Certainly the COVID situation only accelerated these concerns with so many people working from home, and it just was a completely different setup. But at the bank, we consider cyber and regulatory requirements basically non-negotiables. These are activities, when we look at our investment portfolio, as much as we love investing in our mobile banking, these non-negotiable items, they go first. They're the first priority, because again, you don't really get to be a bank without tending to your regulatory, your compliance, and your data security, data privacy, and cybersecurity concerns.
The regulatory piece is absolutely a hurdle. And I think it's funny to me because that's where I go back to the partnerships with the fintechs too, we're being able to work together, because the reality is that a lot of them don't understand those hurdles that we have to go through, and we're first and foremost in the risk business. So, that I don't care how cool the idea is, if we can't get it past them, if our security is not where it needs to be, game over, right? So that part is helpful. And I think we've had a lot of success in kind of the open kimono, I would say, approach, where we said, look, let me show you what we have to go through. This is why a SOC 2 matters for us to work with you. This is why these components are critical. And I think we're also educating them, which is allowing us to have great partnerships and then deliver a better client experience to our customers. But it's a lot of partnerships. And I think our biggest partnership is truly with our regulators in order to help us get there and stay competitive.
Jacob, when you look across the enterprise and look at your top technology projects or strategic initiatives, what are they at the moment? Can you share some of those with us, please?
Yeah, well, as Lindsay mentioned early, mobile, everything mobile for us. So we have some very big mobile aspirations. A movement to public cloud in a very kind of bold way over the next 3 years is a big initiative for us. Data is kind of data on all fronts, whether it's data management practices, whether it's analytics and beefing up in AI and ML. Those are key. And I'll also mention APIs and kind of open banking partnerships. That's key to our future as well. And we've had a couple pretty key partnerships in the last year with Economy and 1% for the Planet, which is, we see ourselves as the leading sustainable bank in the United States. And so being able to make those type of partnerships is key for us.
Got it, great. Lindsay, how about for First Foundation?
Well, I'm actually feeling quite good about ourselves because we're focusing on a lot of what Jacob's focusing on, which makes me feel like we're going in the right direction. I mean, we're a $7 billion institution, so I feel good about that so far. It's funny. I think the mobile piece, it sounds silly because it feels like mobile banking's been around, but it's just moving and changing so quickly that we have a lot of initiatives on that front to continue that delivery. Also on the commercial side, because while I mentioned earlier that, we are trying to focus more on that for the consumer, when you look at a lot of the commercial business stuff, a lot of that is still a little old school, right? And especially when it comes to the technology. But what's been fascinating is it's also leveraging the APIs. I mean, we've recently upgraded our commercial banking system to be better equipped to handle the APIs. We're doing the same thing on our consumer side. But what's fascinating is client requests from our very sophisticated commercial clients that only seemed like specialty requests are now being driven down to your mom and pop client. So the reality is that these softwares are getting more savvy for Joe Banker or for like Joe Pizzeria, right, to come over here. It's not just the big commercial businesses. So we need to make sure we can help accommodate that regardless of the size of business or consumer or how big that wallet is. It's not going to be it's kind of going to be a must-have, and that's what we're focused on.
Great. No, that's awesome. Lindsay, what do you think is the greatest market opportunity that your business has at the moment?
Ooh, that's an interesting question. I think it's the next generation, and I don't know if millennial is the right term for it, but I think it's really focusing on that group of individuals because they're watching their parents retire or they're starting to plan for the future. They're also, I think, from a tech perspective, a lot more technologically savvy than their parents are. That boomer generation. And what's interesting is they're in the process of taking over, whether they're taking over the family business, whether they're starting to help out, whether their parents are getting sick and they're needing to kind of step in. And the reality is that that's our opportunity to keep that client and keep that relationship, because if not, if we don't stay relevant on the tech side, they're going to go where they want to, where they can do things quicker, easier, faster, web-based, mobile-based, etc. And I think if we don't pay attention to that demographic of client, I think we're really missing an opportunity. And I think, unfortunately, some groups miss the boat because they may not have as big of wallets today, but I think we're being maybe penny wise and pound foolish if we don't give them the attention.
Got it. That's a great answer. It's like the customer of the future is not necessarily the customer of today. And you have this massive transfer of generational wealth. Like you want to be able to capture that, as well as new people entering the workforce and becoming customers. Jacob, how about yourself?
Yeah, I think as we are a leading sustainable bank, that is really important to us. That's basically our brand promise. Most people don't actually realize that when they deposit money in a bank, that money gets put to work, and we're starting to find out that people do care. They do care how their money's put to work. And so is it going into fossil fuel industries, or is it going to support women entrepreneurs? And so as a bank, we don't give loans or to anyone in the fossil fuel industry. We don't do anything with tobacco. And so that's a big part of our go-to-market right now from the consumer side. all the way up to large corporates. And I think you're going to see some pretty big organizations publicly break up with their banks today in favor of a bank like ours. And so that's really meaningful. I'd also add, when we think about just kind of what's gone on over the last 12 months, from, as Lindsay mentioned, the PPP lending, you really start to understand the impact a bank can have on a community, and what are you doing about that as an institution. With our PPP work alone, we issued over $3 billion in loans over a few weeks that we think saved 300,000 jobs in the community. And so it's things like that that are really important to who we are and the type of clients we're going to attract.
Great. No, that's awesome. All right, final question, and then we'll wrap up. Clearly, you are technology executives, you're leaders, you have a vision. However, in large enterprises, you have some people that will share your vision, that will embrace it, and then others that just are a little bit more reluctant to change. So, for either person, how do you manage change? How do you get an organization behind a bold new vision, knowing that, there's people that want to change and there's people that don't want to change?
Change is hard. I mean, I think we all know that part for sure. I think the one thing that has been helpful is the story, and I think bringing it down to a personal level for our board members, for our executive team. I can't tell you my biggest asset when it comes to trying to help get change in our company is relying on their children, because the reality is that I have a lot of guys in the boardroom that are not sure about all this whiz bang tech stuff, right? But then all of a sudden their kid wants money and they don't want $20 in cash. They want $20 through Venmo, right? Or whatever it might be. And that forced them to go download an app. And what I've noticed is that has probably been one of the best ways to get success. If they're not sure, I tell them to go ask their kids, depending on their kids' ages, right? Like, what are they using? What's cool? Ask. And then what's so funny is they come back and that's actually helped a little bit with the narrative, because all of a sudden they're seeing some of these needs that are changing. It's a little different, but it's been helpful.
Definitely. Jacob, how about for yourself?
Yeah, communication is huge, just being open, transparent, having a vision, being able to show kind of steps along the way and having progress. Those are really key. I mean, I think when people don't see a vision, but they see a lot of change, then that feels uncomfortable. We always, I know we're in the game of technology or the business of technology, but this is all about people. And, we need to really think about people, what makes them tick, what's motivating them, and try to get them pumped up about what we're doing. And I'll be honest, that's been a challenge during the pandemic for me. I spent half my life on the road visiting the teams in different offices, including going to India twice a year and just really trying to connect with people. And so that's been a challenge we're doing it, but it's just not the same. You don't get to, take people out to dinner or have a happy hour and things like that. But yeah, change is constant. There was a book by Thomas Friedman, Thank You for Being Late, where, he talked about change is not only constant, but it's actually accelerating. And so I think we all feel that and just need to remember to take care of our people.
Thank you. I wanted to just kind of summarize some of these findings. First of all, I think it's inspiring how the two of you as leaders of businesses that have been around for decades, if not in the case of BM Paribas, centuries, of being able to just continue to innovate. And it is really inspiring. And I think that you've really weaponized both digital and the physical assets together to create what I think people really want, which is the best of both worlds, Lindsay. The way you said it, it's not either or, it's really a hybrid of both. And again, congratulations on your leadership. Love to see what you all are doing in the future. And thanks again for spending some time with us to discuss this very interesting topic.
Thank you so much.
Yeah, thank you. My pleasure.